Hello everyone. I'm Sandhya Bharti, Head of Editorial IP and News at the Indian Startup Times. And today in our interview, we are joined by Mr. Kunal Khattar. He is a serial entrepreneur and venture investor with over 2 decades of global experience, best known for backing and building category defining startups across mobility and emerging sectors. Mr. Kunal, thanks for joining us.
Thank you, Sandhya. Thank you for having me.
It's a pleasure, Mr. Kunal. And Mr. Kunal, before we jump into the conversation, I'll take just a quick minute to introduce Indian Startup Times. So, we have been building the platform for almost 3 years now, and it's been a very organic and incredible journey for us to see the kinds of responses we have received. Like over time, IST has grown into one of the trusted voice in India's startup ecosystem with close to 6 million users every month across our website and social channels, and a very engaged community of 39K plus founders, investors, and operators. So, now talking about our focus has always been quality, deep insight led stories and thoughtful conversations with founders, venture capitalists, and industry leaders, like rather than just a headline driven coverage. Beyond content, we are now evolving into a more network driven platform, like one that actively connects startups with investors and enables meaningful conversations around capital, growth, and real world challenges. So, with that context, we are really glad to have you here today, Mr. Kunal. Looking forward to a great conversation.
Yes, great. Let's get started. Thank you again for having me, Sandhya.
Once again, it's a pleasure, Mr. Kunal.
So starting from the question, from your background and have had a diverse journey across entrepreneurship, corporate, and venture investment. What are the key points that led you to build Advantage Founders? And how have those experiences shaped your investment philosophy today?
Oh, that's a great question. So, my journey has been really shaped by the different experiences that I have. And, I've literally changed my profession every 8 to 10 years, working in large multinational companies like Ford. So, I was in the US for about 10 years and had an opportunity to work at Ford Motor Company. So, that was my first experience in an OEM. And then I spent a lot of time in consulting in Silicon Valley, advising companies like Stamps. And then I had two startups in the Bay Area. The first one didn't do anything. The second one, we've scaled well and exited. And then I did a 2.5, 3 year stint in private equity. So that was a totally different experience as well. Then I moved back to India and started Carnation Auto, which became India's largest multi-brand auto solutions company, ran that business for 8 years. We exited that to the Mahindra Group, and then I was thinking of what to do next. And my father suggested to me to build a platform and help 100 successful founders. And I partnered with the Motherson Group and the Hero Group, two of India's largest automotive groups, and launched AdvantEdge Founders. It was a platform which was a seed fund, but a sector focused one. And we decided to focus on the automotive space. The timing was perfect because Uber and Ola had just entered India, and we realized there was an opportunity to build multiple shared mobility platforms as long as they were affordable, asset light, and scalable. So we invested in companies like Rapido, Chalo, Zingbus, Sheru, and Shuttle. And many of them have gone on to become entrepreneurs, become category leading companies. So I would say that what shaped Advantage is having a very operator lens, founder first approach. And that's why we love to partner with founders in the 0 to 1 journey, which is probably the most important in establishing the right product, the right GTM or go to market, understanding and refining the value proposition, and signing up the first few paying customers. So we just don't write checks. We actually mentor build from the earliest stages, and that's what we've become very good at.
So looking back, was there a defining moment or decision that fundamentally changed how you evaluate founders or market?
We are, as a fund, being a sector focused one, we're not driven by whatever is the most recent or hot sector in which a lot of capital is flowing into. So we're not driven by FOMO. I think one of the things we've realized in the auto industry, which is almost 20% of India's GDP, actually is across the automotive, mobility, logistics, transportation, and energy space. So it's a massive, massive $1 trillion market opportunity. What we've seen is that auto industry, the ICE or the internal combustion engine hasn't really evolved in 100 years, but what we've seen is that this industry has gone through different stages of evolution. First, vehicles became connected. Once they were connected, they became shared. Now that they're shared, we're going to electrify them to improve unit economics. And once that happens, we may finally achieve autonomous, and then so on and so forth. So, having picked up on that continuum, we know that we are today in the phase where we're transitioning and adopting shared electric mobility. But India, it's very important to understand, just as shared mobility, it was a company like Rapido, which was running two-wheeler taxis, was able to, you know, beat out companies like Uber and Ola, which were predominantly four-wheeler first. So, which means that you have to solve India first or India-centric solutions, because India is very different to a US or China. The needs are very different. Affordability is very, very important here. And you've got infrastructural challenges that you've got to solve for. Even electrification, honestly, India is going to be unique in terms of the form factor. You already mentioned India is really not a market leader with four-wheelers, and EV adoption in US and China was predominantly four-wheeler personal mobility. In India, I think four-wheelers is only 8%, and commercial vehicles, even though they're just 10%, um, consume almost 70% of energy. And therefore, we think India, the transition from ICE to EV is predominantly going to be led by commercial vehicles and form factors where India is a market leader, whether it's e-rickshaws, two-wheelers, three-wheelers, and buses, and commercial vehicles. And that's fundamentally the biggest difference in the way we look at our country, or the opportunities in India versus, say, what is happening in the US or China.
Yeah, that's very fantastic. Like talking about it, and building on that, you have been an early believer in mobility. So, how do you see India's mobility ecosystem over the next 5 to 7 years? I would say, especially across EV, logistics, and shared mobility.
So I think what happens is that you will always have a certain sectoral sort of opportunity that will scale tremendously in the next 3, 4 years. So if I picked up, like I mentioned, the continuum, like shared connected cars were big 15 years ago. Shared mobility was big 10 years ago. And now electrification is the big opportunity. I think in the next 4, 5 years, we're going to see dramatic shift, whether it's geopolitical and the need for energy independence, or strategic autonomy, or just the pollution, the desire, or climate reasons where everybody wants to reduce pollution across our cities. And finally, the need to build more profitable businesses. India, the fuel is taxed very heavily. So it's almost 100% tax on every liter of petrol or diesel, whereas electricity is free or subsidized to large extent. So one of the reasons why a lot of these platforms, whether it's quick commerce, food delivery, e-commerce, or ride hailing, is always running on thin margin, is because their cost of logistics or transportation is very high. And the reason for that is high fuel cost. So all of them are looking to electrify so that they can bring down their cost of logistics and therefore improve their contribution margin. But when you ask them that what is slowing them down, they come back and say, well, we don't have the right form factor or the right product. Or they say we don't have the right energy solution. It takes too long to charge. Or they'll come back and say, oh, the financing is not affordable, or we don't have the right financing solution. As a fund, we have picked up every single commercial use case in the transportation sector. Like I mentioned, shared mobility, a two-wheeler, three-wheeler, four-wheeler, logistics, food delivery, quick commerce, and say, okay, what's the most popular ICE vehicle, whether it's a Bajaj a three-wheeler, or a Hero two-wheeler, or a Tata bus, or a Ashok Leyland truck. And then we say, okay, are there parallel or similar products on the EV side? Is there financing that's available at a similar rate of interest, similar tenure? And finally, is there an energy solution that delivers the need for charging without sort of compromising on how that vehicle owner is using it for business? So we have to solve for that as well. So if you can solve for the product, energy, and finance, we are very clear that 100% of of vehicle sales in future are going to be electric, and that's probably the biggest opportunity in the next 5 to 6 years.
And you mentioned how the ecosystem is evolving. So bringing it down to the founder level. So what are the core tech you look for today? particularly in capital intensive sectors like mobility and auto tech?
If I look at market trends and capital, so there is enough capital available, and there's opportunities across. We refer to this as the electrification as Suzuki 2.0. What we mean by that is that Suzuki 1.0 was 35 years ago when Suzuki Motors established itself in India. They actually helped create the entire ICE ecosystem or value chain, starting from setting up those 20 plus joint ventures for auto components, companies like Motherson, Lumax, etc. If I do a sum of parts of the auto component industry today, is probably worth north of 120 billion dollars. um, Suzuki set up good manufacturing practices, created a culture of assembly line, robots, etc., which was then duplicated by many other OEMs. Today, we have 38, I believe, OEMs in the country, which themselves would be worth anywhere between 100 billion dollars plus. And then to sell cars, we needed auto finance, auto insurance, warranty, to market sales, service, and parts. We needed distribution. So the 3S dealership model was established. Today, there are 18 or 20,000 dealers across the country. And then these vehicles, whether it was four-wheelers, then two-wheelers and three-wheelers and trucks and buses, all the logistics businesses, ride-hailing businesses, public transportation are all running on these ICE vehicles. Finally, the oil companies are importing 160, $170 billion of crude oil, refining it and distributing it. So if I have to add up the entire ICE value chain from the components, OEM, finance, insurance, distribution, warranty, aftermarket service, logistics, it's $1 trillion of value. Like I mentioned, it's about 18 to 20% of India's GDP. Electrification for us is probably a once in a lifetime opportunity where we're going to see $1 trillion of value creation happening in the EV ecosystem. EVs for us is not a vertical, it's actually a horizontal opportunity, which means that we're going to see electrification across the entire automotive, manufacturing, distribution, auto finance, auto insurance, mobility, and energy space. So if you add it all up, that's really the market at which we're going, and we're super excited about it.
And same within mobility, the participation in Astronova recent 60 crore series and signals strong conviction in EV financing and asset management. So what makes this segment particularly compelling right now within your broader focus?
I think, like I mentioned before, I think the three sort of value unlocks that are important for us to see rapid adoption is one is that we need the right EV form factors, we need the right energy solution, and we need the right financing. We think that the future of EV leasing and financing, a majority of that growth is going to come from new age companies like Astronova or Exponent One. And the reason for that is traditional legacy finance companies have a business model which is not suitable for, say, the gig economy workers or the DCOs, so since we focus only on the commercial use case, we're not really too worried about consumer financing. It's also we all B2B financing. Our traditional banks are very, very comfortable lending to individuals with high credit scores and bank statements and salaried employees. But gig economy workers, most of them are first to credit. They don't have bank statements. They don't have, they are thin file clients, and they don't make money on a monthly basis. They do daily payments. So for us, it's all about creating a financial platform that caters and meets the need of the customer. Secondly, we think traditional banks become very good at underwriting the borrower. They know how to do assessing borrower risk. But I feel that EVs being a new form factor, understanding the product, and we feel the majority of the risk to finance an electric vehicle is with the asset much more than the borrower. And we don't think legacy banks can do that. So for these two reasons alone, we think there's tremendous opportunities for companies like Supernova or Exponent One to scale and become absolute large companies, especially if they're 100% EV and they're not doing ICE. And more importantly, they understand the product, they understand the technology, they understand battery, cell chemistry, etc., etc.
Yeah, that's an insightful, especially on financing. So Astronova is also doubling down on AI and data to optimize the asset life scale and life cycle and skill EV adoption. So how critical do you think tech-led financing and data layers are in unlocking the next phase of the EV ecosystem?
I think we're looking at EV first businesses like Astronova because they are very comfortable in understanding and underwriting the asset risk, which I just mentioned. A lot of that comes from looking at the battery analytics, looking at state of health, state of charge, getting a good handle on. For that, you need EVs, as you know, are IoTs, right? They're Internet of Things. They're delivering constant data, which you have the ability to analyze on a continuous basis. So, being data first and being building technology platforms, you can actually leverage AI tools to be able to do constant monitoring of how the asset is being used. And therefore, whether it's interest rates or what you charge or insurance can now be usage based or behavior based rather than being static, which is what traditional banking, financing, or insurance companies are doing. And this allows you to actually charge less for customers who are high quality customers and penalize those that are probably using the vehicle in negative ways. And that becomes more dynamic, which actually allows you to increase your profit. And it's very difficult for legacy companies to sort of copy that because it's just not in their DNA to do first principle thinking when it comes to things like that. So leveraging AI, leveraging technology, data science, understanding cell chemistry, understanding battery health, understanding the life of a battery, how many cycles is gone, what's been the depreciating curve, and things like that, optimizing how and when the charging needs to be done. These are all different variables and things which are available to companies like Astronoma, which we think is going to allow them to be far more competitive than legacy finance companies and when it comes to financing or leasing EV assets.
Okay. So do you think it's becoming a key differentiator between winners and the rest?
Absolutely. I think the beauty of technology is where you get high operating leverage, which means that there's a continuous improvement. The more you finance, the more you learn, the more you learn, the better, the more competitive you can be in terms of what you charge customers, and the more profitable you can run these businesses at scale. I mean, today Exponent One is doing something similar, targeting a different set of customers. They're specifically financing Exponent enabled vehicles, so it's a narrower segment, but they understand the technology better because the company owns the battery and therefore has complete end-to-end control on the asset degradation and things like that. Therefore, for these companies, with the continuous use of data and analyzing that, will continue to improve how they underwrite assets, how they uh, how they price out the loans and things like that, and therefore build scalable businesses with a huge competitive advantage over legacy companies that don't have these skill sets or capabilities.
Expanding beyond mobility, do you also evaluate opportunities in sectors like fintech or adjacent categories? Like, how do you balance your approach between angel investing and institutional solutions when looking at such opportunities?
Absolutely. Like I mentioned before, for us, the transition to EV is not just going to be a vertical opportunity. So it's not just the form factor. We think there is opportunities across the entire value chain in adjacent areas. So energy, for example, whether it's the how you will deploy energy solutions for charging electric vehicles, or how will you generate that energy from renewable sources or green sources, or how you will store energy to be able to charge your vehicles, or how you will start trading energy and make actually the electric vehicles more affordable. So we're looking at all these areas. Mobility itself, apart from the transition to EVs, mobility itself is there are opportunities across things like the defense sector, drones, space tech. When you think about it, all of them have some elements of mobility attached to it. So we're looking at those spaces as well. Fintech has been an area that we have done exceedingly well in. We have a couple of investments that may not be in the middle of mobility. One is a gold savings app called Char, and one is a real estate platform called Ambak. So we've done exceedingly well in that space as well. But I would say that the majority, 80-90% of our capital and investment is in the areas of auto mobility, EV, and energy.
Like, do you invest in media and tech companies as well?
We have not done media businesses. No, that's not an area that we can add a lot of value, but we are looking at deep tech businesses for sure. which have longer gestation periods and things like that. Like I said, areas in space, drones, batteries is actually a lot of technology involved, hardware, software. Manufacturing is very tough, but we are looking at those businesses now because they're core to our thesis and focus area. And as a fund, we continue to run. Every fund, we have a slightly differentiated thesis or focus area. For us, Fund 3 is what we are now raising and investing from. It is focusing on this EV transition. Fund 4, we may have a different focus area for sure.
So, taking a step back to the broader ecosystem, so what are the biggest shifts you are seeing today in terms of capital flow, founder mindset, and emerging sectors?
So the biggest shift that's happening, of course, I think there is a proliferation of funds. And we've seen whether it's the angel network or syndicates or micro VCs or seed funds or venture funds or growth funds and private equity and hedge funds. We have seen so many different types of asset classes or types of fund structures that are there. So I think there's enough capital. Layer equity with debt. Now you've got venture debt, you've got debt from banks and debt from SIDBs and sovereign debt funds and private equity funds and things like that. So it's getting easier and easier to source capital. I think good founders building good companies with large markets will always have capital. I think that has changed in the last 10 years. 10 years ago, there was very few options available to good founders. And I'm sure 10 years from now, the amount of capital that's going in will only go up exponentially. And the reason for that is we've started seeing exits, liquidity, funds started delivering or giving capital back to investors. So I think that's a great cycle that we have. And hopefully we'll continue to scale and continue to build a very large startup ecosystem in India.
Yeah, we could get it. And finally, what practical advice would you give to early stage founders in today's environment?
I think I can talk an hour about giving advice to founders. I think the most important question I think founders have to ask is why do they want to be an entrepreneur? I think many people from consulting, investment banking, or venture jump into entrepreneurship because they think there's fame and fortune. And I'd like to tell people that that's not the reason why one becomes an entrepreneur. That's the outcome of being a successful entrepreneur, but not the reason to become one. I think the most important thing, of course, is that you've got to be a solution. There is a problem statement that you've identified from your work or personal experience, and you've not been able to find a solution in the market, and that's keeping you up at night. So, founders who have successful are those who have a problem statement and start building a solution around that. I cannot tell you how many times founders come and pitch a solution to us and they're looking for problems and their solution solves. Second thing, of course, is that don't be wedded to the initial problem statement. There's a high probability things are going to change. There is no straight line to success. You're going to have ups and downs. You're going to have many times that you'll have near death experiences. The important thing is to keep being patient, be resilient, and be ready to make sacrifices. The entrepreneurship journey is difficult, long, lonely. So just be prepared for the slog. Country, India is not a forgiving country. There's a lot of infrastructural issues that you will face. You'll have to build those solutions yourself. So success will be 10 to 15 years down the road. So it's going to take up a lot of your youth, many of the best years of your life. So make sure that you're prepared for that.
That's a great note to wrap on, Mr. Kunal. And thank you for sharing such clear, grounded perspectives on mobility investment
Okay,
strategies. How will
great.
startup
Thank you so much.
ecosystem evolving? So, yeah, it was such a pleasure and inspiring to hear from you.
Okay, great. Thank you so much for having me, Sandhya.